my expectation would be for us to see spot gold now continue its upward rally. Is that in this wedge formation, what it's been doing, that 200-day moving in average, a chance to catch up to the price, that it's got a stronger foundation. Both spot gold and spot silver would have gone too far too fast if there's a pullback and there's a consolidation. All that really does is build a stronger base and foundation.
Silver's performance to gold has languished, pulled back. Now, that doesn't mean they were going down. It just meant they weren't going up as much as gold was. Okay, but that started to change. And early this year, silver started to really ramp on the upside. It's a signal we put out to our subscribers based on other technicals. And on the November close of the spread versus silver versus gold, you also had a breakout. So not only did gold say, hey, I'm on top of the game versus the stock market, silver said, I'm going to outpace you, mama metal. Silver is coming up from depths.
Lynette Zang is a leading precious metals expert and CEO of ITM Trading, focuses on silver's changing behavior. After lagging gold for an extended period, silver began accelerating earlier this year as key technical signals turned bullish. A November close confirmed a breakout from a multi-year base in the silver-to-gold ratio. With gold already outperforming equities, Zhang believes silver is now positioned to outpace gold, emerging from long-term depths with renewed momentum. Michael Oliver is a veteran market analyst and founder of Momentum Structural Analysis, explains that spot gold remains in a strong uptrend, with recent wedge consolidation allowing the 200-day moving average to catch up. After moving too far too fast, this pullback is healthy and helps build a stronger technical foundation for the next advance in both gold and silver. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
That's what's happening in spot gold. Let's look at spot silver as well, which now has officially broken above. I don't know where it's going to close today, but it has indeed broken above that $60 mark. Not a surprise. I mean, once you know how to read the technicals like this kind of stuff, truthfully, it doesn't matter what you're looking at. It all works the same. So while silver did give that 200-day moving average a chance to catch up, it is continuing to fly. Now, both spot gold and spot silver would have gone too far too fast, and so it's okay if there's a pullback and there's a consolidation. All that really does is build a stronger base and foundation. But you may have heard that last week, the Treasury bought back $12.5 billion debt, which is the highest and largest buyback, and they're calling it here a rescue move in U.S. history. What does that tell you? First of all, what you are looking at is the gold holdings of the U.S. starting in 1913. Now, I've shown you this in the past, but that would be a run on the dollar as foreign governments sent in dollars and pulled the gold out of the U.S. system. This was really a big, huge problem, but I wanted you to see that run. The reason why I wanted you to see that run is because gold backed the currency. So when there was that run, it showed a loss of faith and trust in the U.S. dollar. And we're seeing the same thing. We've talked about it over and over again, but here we go. Foreign holders of our treasury bonds peaked in 2008, which is when I hold to this day. That is actually when the system that we knew died. And you can see that run against the dollar has continued. And I hope you can see how much those two runs on the dollar, that loss of confidence is shown, because that goes back to why the Treasury actually had to buy back that debt. But it's even more than this.
Now, back in November, where did silver actually close in price? $56. Okay, 2 weeks and a day into the new month, we're $64. Wow. Okay. something happened. And it wasn't just that silver was going up. It's been going up for a couple of years, like gold, right? Okay. But the spread broke out. And once that spread broke out, it told us if you're going to go into monetary metals, emphasize silver and silver miners. Doesn't mean the gold miners are no good or gold's no good. It just means silver and the silver miners, which have been languishing and vastly undervalued compared to their peers, are now ascending, and they're going to be on the top, and that's what's happening. And we think silver at minimum is going to at least reach 2% very quickly of the price of gold, meaning from where it was at the lows back like in April, it's going to double in value relative to gold. Not double in price, double in value. So, and the gold's going to be going up during that time. It has been. But silver's going to outpace it. Now, there's another chart that might help you in that regard. Flip the page one more here. No, another one. There you go. This is gold going back to when it was legalized. $200, it dropped down to 100 back in 1976. And then from that 76 low to the 1980 high, that's the first up arrow in the horizontal. That's an 8-fold gain. This is a ratio chart, logarithmic scale. It's not a point scale. Then you made a low in 2001 and 2001, I think it was exactly, $265 or so. And you had another major surge over a lengthier period of time, but the same dimension move, an 8-fold gain up to the 2011 high. And then you had the pullback to 1,050 on gold, and then you labored for a couple years, and finally you took that out in 2020. And you're now at where? 4,000 plus. Well, the bear low was 1,050. We're only 4-fold gain in this bull trend. So the people who say, hey, gold's overdone. Well, it isn't even matched. It's only halfway the dimensionality, percent gain that we saw in 1980 and then we saw at 2011 peak. So if we merely match those two prior bull markets, gold would be like 8,500. Now, we're not projecting that as a target. We're just simply making a point that people who think gold is overvalued don't realize that on a percent gain basis. No, it's not. And we certainly have technicals and fundamentals that are far more potent this time around than were in play back in 1980 or 2011. I frankly think we're going to go way past 8,000, probably in the next year. In other words, you factor in M2 growth, how much quantity of money has been created, printed over from 1980 to 2011 or 2011 to the present. Silver would probably be, $500 just to match those highs in terms of decay in the money unit. But anyway, this chart is broken out, but if you just take a simple measurement, and again, this is an idiot rectangular measurement. The lows were like $4 or $5, range, that 50-year range, and the highs were 50. So let's call it $45. So we're talking about, we're going to go up to, on an arithmetic scale, you go up to 100, but on a ratio scale, that's a 10-fold dimension rectangle. You broke out at 50, that says you go to 500 to match the depth, the thickness of that range that you just broke out of. We think silver's going to do something extremely dramatic, and it's going to do it in the next handful of months.
Silver breaking above the $60 level, while gold remains firmly in an uptrend. After moving too far too fast, short-term consolidation only strengthens their foundation. Zang highlights the U.S. Treasury's record $12.5 billion debt buyback as a rescue move, signaling declining confidence in the dollar. Historical gold outflows and shrinking foreign treasury holdings echo a growing global shift toward hard assets. Michael Oliver highlights silver's dramatic rise from $56 in November to $64 within weeks, signaling a breakout in the silver-to-gold spread. Undervalued silver and silver miners are now poised to outpace gold, potentially doubling in value relative to it. Historical ratio charts suggest that silver could experience a major surge, possibly reaching unprecedented levels in the coming months. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos.